All right, you know how most people try to make money in real estate by buying property? I do something very different. I do something really different. In fact, this is cool. I really like what I do. This is my primary investment in real estate. You ready for this? It's private money lending. Yes, I'm actually the lender on these deals rather than the property purchaser. And if you want to know more about this kind of thing, just go ahead and leave a comment below and I'll get back to you on this. But really what I do, and I found this, it's so much easier and more fun and more profitable, in my opinion, than actually buying the real estate. PML, or private money lending, is definitely by far my favorite type of real estate investing. I do it all the time. It is my primary investment right now. Okay, so let's talk about what is private money lending. Private money lending is just that. It's private money, so it's my own money. I'm not a bank, I'm not an institution, although I'm the lender in this case. I use my funds to lend to somebody else on a real estate deal, because in my case, I only work real estate and more specifically fix and flip real estate. So that's private money lending. I'm using my private funds in a deal, lending it to somebody to work on their fix and flip property. Okay, so how's this work? An operator finds a property they want to renovate. They take it, they come to me, they say I need money to renovate. I lend them the money to renovate the property. They build it out, they put it on the market, they sell it, they make money from the sale of the property, and I make money from the interest on my loan. So I get paid, they get paid, it's a win-win. Now, I don't just lend on any property. Of course, I need to underwrite the property. I will look at the deal and I need to make sure that they're going to make money, the property makes sense, it's good collateral, and everything's going to work fine. Once I determine that, then I will go ahead and lend the money. So you might be asking, why would the investor not just go to a bank where the money's cheaper? And you're right, that's a good question. Banks are cheaper. My money is more expensive. But banks don't typically like to lend on these. And when they do, they make it difficult and they're slow. So it's a long drawn out process. An investor needs to move on these products. They need money quick and they're willing to pay more because they save so much time. If they can get this project renovated and on the market and sold quickly, they can make money and I can make money. So you may be saying, this sounds risky, and hey, you're right, this isn't without risk. You need to know what you're doing because borrowers don't always perform, contractors take the money and leave, property doesn't sell or doesn't sell for what you think it's going to sell for. There's a lot of reasons why this can go bad, but this is why you need to know what you're doing so that you can mitigate that risk. There is a lot that goes into this. You do need to do this correctly. How you set up your structure, how you protect yourself, how you evaluate the deals. I'll break these down in future videos. So I'm curious, have you ever heard of private money lending before, or is this the first time? Please leave me a comment and let me know if this is something new to you. Also, feel free to comment on what kind of breakdowns you would like, because there's a lot of breakdowns I can do on these kind of deals, and it's just a matter of where do I start. So your comments are going to help with that. Please leave me a comment below, and if you found any value in this video, please click that like, and don't forget to subscribe as it does help my channel. Thank you, and I'll see you next time.